Are you ready for an exciting video? If you're not, this is not the video for you. We're going to be going over everything that is happening currently with AMC. We're now on the threshold securities list. It looks to be that there is millions of FTDs coming due with the T plus 35 settlement time in this next upcoming week, and I think this will be very, very exciting. Cost to borrow rates are at levels that will always give you some degree of a short squeeze. And I want to say I'm not a financial advisor. I want to say this is not a recommendation. I want to say invest your own money however you please. I cannot be held responsible for the choices that you make, so don't base your choices off of one video. But every time AMC has got data that is this high, specifically cost to borrow rates, you've always seen a rally. So we're going to get into everything going on. The technicals, literally everything. So I hope you guys are ready for an exciting one. If you are, hit that like button and subscribe to the channel. If you guys want to come trade with me live in real time as well, link down below in the description of this video. That is neither here or there, not important. Let's get into it. So AMC on Friday was neutral, didn't change at all. In after hours, you did go up 6 cents. That was a 1% move. So net change on Friday was a 1% gain. Now, considering what the markets did on Friday, and the Nasdaq down 1.5%, the S&P down 1%, I think that's a pretty positive thing overall that AMC was not in the red. And I think that alone is a big change relative to what we've seen over the past, call it, year. Most days, if the markets are down, AMC is also down. But what you have going on here is very interesting on a technical basis, as well as all of these other things we're going to talk about. So I want to save the technicals for a little bit later into this video, because I think technicals by themselves are flawed. Like if someone is highlighting the technicals and that's really what they're focused on, I just think that's flawed, because these other things, the cost to borrow rates being so high, the failure to deliver, the short interest, the overall sentiment in AMC, or really for that matter any other stock, is a lot more important than the technicals. Because after all, why are technicals bullish or bearish? It's going to be based off of these other things. Now, specifically with AMC, if we take a look at the Ortex data, you could see a cost to borrow rate from interactive brokers at 385%. That was the last reading that we did get. Earlier in the day, you were at 412% cost to borrow rates with AMC stock. And if you take a look at the cost to borrow average across different brokerages, you're sitting at about 444.5%. So super, super high. Cost to borrow max at 1,000%. And why the cost to borrow rates have really been going up as of recently and spiking on Friday to over 1,000% is, I think, in part due to the failure to deliver, due to the stock not seeing its transactions, its trades closing out for 5 consecutive settlement days by a registered clearing agency. So what that means is either on the call side or on the put side, usually happens with options and in the IOU market, right? Because there's not always going to be shares accountable. Let's say you have a huge option influx and you're seeing millions of options placed. The market makers, they're still going to let you buy and sell options, even if there's more options than the outstanding float. Think about it like that. And we've actually seen that in the past with AMC. But nonetheless, if you have a lot of calls that expire in the money and market makers, they have to deliver on those shares, or even on the put side, right? Usually happens on the call side, but it can happen on the put side as well. If they need to deliver, call it 10 million shares, but there's not 10 million shares that they can actively find and purchase, then the stock will go on the threshold securities list. This is basically highlighting that there's a lot of positions that need to be finalized, that need to be closed out. So it puts kind of the market makers, hedge funds, everyone involved in delivering on their process, right? Delivering either the shares or buying the shares. It gives them notice that, hey, you gotta hurry up. you got to get this stuff taken care of. But this is public information. So when stocks go on the threshold securities list, I should say what we've seen throughout 2021 and 2022, when these stocks get on this list, that is telling you there is guaranteed buying coming at some point down the line, whether in the next couple of days, over the course of the next couple of weeks, or even the next month or two. There's buying that is coming. And this FTD information is public information. So we're going to talk about that in just 1 second. But a lot of investors do contribute the threshold securities list to possible short squeezes. And most of the stocks that have squeezed over the past year and a half have been on the threshold securities list. AMC, GameStop, basically every time that they have rallied in a big way, they were on the threshold securities list. Think about Redbox, think about any other stock that just went parabolic. 9 times out of 10, it was also on the threshold securities list. And due to people needing to get access to shares, and I shouldn't say people, I should say market makers or hedge funds, money managers alike, if they need to get access to shares and there's not a lot of shares to begin with that are accessible, that is a thing that is causing the cost of borrow rates to spike up. So I don't think it's any surprise over the last, call it week, cost of borrow rates have went from, 200-300% to 1,000%. I don't think that's a coincidence, and I think it's a very bullish thing. Now, if we take a look at the FTDs that are actually going to be coming due in this next week, and you could see the dates for these FTDs over here on this left side, and then you got to look at the T+35 date, because most of the time, these hedge funds, these market makers, they tend to like to drag out this process. They tend to, try to get access to shares without paying astronomically high cost borrow rates or having to buy back the stock when the stock is presumably much higher, which AMC going from $3.77 on the low to $6 today. If you were seeing these failure to delivers in January, well, now the stock's almost 100% higher. So it's a lot harder to close out of that position. Now, for next week, starting on February 7th, that is going to be on Tuesday. You don't have any FTDs coming due on Monday. On Tuesday, you have about $7.5 million worth of FTDs. That is 1.8 million failure to delivers coming due on Tuesday. The next day, February 8th, on Wednesday, you got 1.8 million, or 1.7 million shares that will come due as far as FTDs, worth about $7 million. And you guys can see the price of AMC at this time. I mean, on Tuesday, on January 3rd, it was $4.07. The next day on Wednesday, it was $3.93. And then on Thursday, you're going to get about 716,000 FTDs that do expire on the T+35 settlement time, worth about $3 million, and then 861,000 coming, what is that, on Friday? Yeah, on Friday, worth about $861,000, or 1,000 shares, worth about $3.5 million. Now, these numbers might look small to a lot of people because at times in the past, AMC's failure to delivers have been a lot higher, mostly when AMC had went up substantially in price. And I do think the failure to delivers are likely to go higher as AMC's share price does go higher. Typically, that's how it happens. But these numbers are all relative. If AMC is at 10 million shares trading hands every day, well, 1.8 million FTDs that come due on a specific day, that's almost 20% of the volume. That's huge. If the stock in theory had 200 million shares trading hands every day, not such a big deal. Well, where do we currently sit? So over the past couple of weeks, really the last couple of months, you've been in this range in between, and I hope that wasn't too loud for you guys, in between about 20 to 35 million shares trading hands every day. As of recently, the volume has went higher, but the average over the last couple of weeks, we'll just call it 35 million or even 30 million. Just round it to an even number. Call it 30 million. And I think that's pretty fair, the average over the last couple of weeks. If you're looking at, 1.8 million FTDs coming due on just any given day, that's pretty sizable relative to the volume on that day. And that's just buying pressure, considering the FTDs alone. That's not to mention just people buying the stock, hedge funds in their hedging strategies, because they are trying to play this arbitrage opportunity. On one hand, it's going to mean dilution for AMC. On the other hand, it's going to mean better fundamentals. So you actually see a lot of hedge fund activity in the markets right now with AMC and with APE. And I do think it's kind of 50-50. Some people more bullish on AMC, some people more bullish on APE. Either way, I think it will turn out to be a net benefit just for people that are negative on the situation. If the vote does go through, I don't think it changes too much. It'll change the fundamental valuation of AMC Entertainment more than I think it will affect the share price, other than just seeing a short squeeze. I think all of this data ultimately leads to a short squeeze, especially after we do get earnings and we do get some very positive commentary. There's going to be a lot to be excited about. So on a volume relative basis, the amount of FTDs that we are seeing is going to be substantial in this next upcoming week. And it does look like there's going to be more FTDs coming in the following week, with some of these days over 2 million shares, but as an aggregate, usually over about 1 million shares, sitting at about 1.4 million shares pretty much every day for the next week. So I think not just this next week, but even next week and likely the following weeks after that, you're going to be seeing a lot of FTDs coming due with the T plus 35 settlement time. So I think that is something that I am very bullish about, and I don't want to leave this out because I know we didn't go over the exact number, but you do have 117.38 million shares sold short with a cost of bar rates. I'm just geeked about the cost of bar rates. The live short interest of free float sitting at almost 23%. These numbers, coupled with the cost of bar rates, coupled with AMC being on the threshold securities list, I think it all leads to a short squeeze, if you can't tell from the drift of this video. Now, on a technical basis, something that I think is very interesting that I want to point out before we look at the bigger picture here is what happened on Friday. So the markets were pretty bullish on Friday as far as the open. If we go ahead and take a look at the 1-minute candlestick chart on the S&P 500, the open was pretty dang bullish. I mean, it basically went straight up, and then you started to sell off towards the end of the day when people started to digest all of this information, right? If you were trading the markets on Friday, then you already know what happened. Now, for AMC, this is VWAP, this yellow line right here. This is the volume weighted average price. When the stock price is above VWAP, that is showing you that people are willing to buy the stock for more and more and more and kind of hold up this trading range, right? To keep the stock in bullish territory is essentially being above this yellow line. When the stock breaks under this yellow line and gets rejected like you've seen right here, it just shows that not enough people were buying the stock to sustain its actual share price. And algorithmic trading programs trade, a lot of them, mostly off of VWAP. So that's why it's a pretty good indicator. Now, my point is, in the beginning of the day, you've seen AMC go from about $6 flat to $6.77 as the markets were in this bullish zone, kind of, right? The markets just instantly went up. And so did AMC. It actually well outperformed the markets. And I think this goes to show you kind of what I've been saying, that we want to see a bullish to neutral market environment for AMC to really be rewarded, to really see the extent of the run that we can see. And when the markets went bearish on the day and started to sell off, so did AMC. It's much greater of a rally to the upside, but it's also a much harder fall to the downside when the markets are in that negative state of mind. And why I'm saying this is because I do think you're at a moment in time where we just got bullish confirmation from Fed Jerome Powell that, I mean, inflation is going away. It's going down. Like, they're probably going to get inflation to 2% over the next coming years, meaning the Fed can pause, slow down raising rates. You don't necessarily want to cut, but it leaves them a lot of room to make adjustments if economic data does slow down. At the same time, I mean, there was 500,000 jobs added for the month of January. It's hard to sit here and say you're going into a recession when you're seeing job creation like that. Hey, maybe the data's skewed. Doesn't matter. Point is, the markets are going to be pretty bullish from this point on because earnings came in pretty good overall. I mean, some companies did not have good earnings, but they had a way to sugarcoat it, right? They had a way to give guidance that made it seem like the rest of the year is going to be okay. And that's ultimately what matters, is not the last 3 months, but the next 3 months and the next 6 months and the next 9 months. And really, you got the big risk of earnings out of the way, because ultimately that is what is going to dictate this market in 2023, is going to be earnings and valuation. That's what people care about right now. And considering those risks are gone, it could give AMC a lot more room to rally to the upside. And you actually did break out above this downtrending level, this blue line right here, and you did break out above the 100-day moving average on Friday pretty sizably before the markets started to crumble, and then you did get rejected at this level again. Now, good news is you are above the 50-day moving average in a huge way. You have not seen a 2-day close above the 50-day moving average since December 6th. And really, you were above this for a while. You kind of seen the same thing play out back here. You were above the 50-day, broke out above the 100-day, broke out above the 200-day briefly, but you got rejected at this trend line. You didn't get the same kind of rejection at this trend line as you did last time. So I do think that is an overall bullish thing. If you break out above this downtrending line, then you're going to be in a bullish uptrend at that point. You're this close to being in a technical bullish uptrend. And from my perspective here, I think the stock's probably going to break out above that, even heading into earnings. And why I think earnings are a little bit more important this time around, and bear with me here, is because the markets are now in a bullish light. The markets at this point, it's not like 2022. It's not like 2022 where AMC beats on everything and the stock goes down 10%, at least in my personal opinion. In 2022, AMC beat, I believe it was every single earnings. They literally beat across the board on everything every single time. But the stock basically always sold off. And there's this phenomenon with AMC where AMC falls after earnings, but then subsequently rallies hundreds of percents after earnings. About 2 to 4 weeks after earnings, you typically always see a rally. Some less, some more, but you tend to sell off right after earnings and then rally 2 to 4 weeks after. So it'll be interesting to see what happens this time around, but I think the market environment we're in is a lot more accommodative, right? They might be able to see the light at the end of the tunnel with AMC, especially if you could start to get some of these credit card businesses or popcorn businesses up and running, things that we've been waiting on for a while now. I think people will be very much bullish on AMC, and there's a lot of hedge funds and institutions talking about this conversion with APE and AMC and how it could lead to a short squeeze. If you take a look at this Bloomberg article, it says AMC's meme stock antics open the door for home run arbitrage. Steep price gaps between AMC common shares and APE preferred units. ARBs, arbitrage traders, bullish on share conversion, see risk in shorting AMC, because they know the possibility of a short squeeze. And I hate Bloomberg for this. I can't look at this article on my computer, but on my phone, no problem. So I actually read this whole article, and just to summarize this up for you guys, people are pretty bullish on the fundamental valuation creation that could happen from this merger between APEs into AMC common shares. And they're also kind of doing this arbitrage strategy of buying ape, shorting AMC, but for like every one ape share they're buying, they're only shorting like half of AMC. So it's not necessarily a net negative on AMC as of right now. And they also mentioned the cost of borrow rates, increasing so aggressively that it's hard to get stable lending on AMC to even make this trade. And that could subject AMC to another short squeeze. Bloomberg, this analyst, literally is talking about an AMC short squeeze. It's no surprise when cost of borrow rates are this high, short interest is this high, failure to deliver. I mean, the list could go on and on. So what we're basically getting at here in this video is you probably don't want to be short on these securities right now. Not an ape, not on AMC. And every time we've got data like this in the past, you have rallied. The question is, do the shorts actually cover? And I think that's the only real question. Do they cover this time around, or do they not? And I think if earnings show a fundamental bullish case for AMC, or at least not a bankruptcy case, right? If AMC just shows that, hey, we're getting to free operational cash flows, or maybe they're there already. Maybe they're at net income. Maybe they made a profit in Q4 of 2022. That would be game changer for AMC, guys. So that is it for this video. We did cover a lot. Hit that like button and subscribe to the channel if you are still here. Leave your comments, questions, or concerns down below in the comment section. I would love to hear what you guys think about all of this information. Add your twist and your spin to it. Maybe I missed something. I feel like we did cover the most important things. But if I did miss something that you think is important, leave it down below in the comment section and we will cover it in another video and give you the rightful credit that you deserve. So that is it. You guys enjoy the rest of your weekend, and I will see you in the next one.